Hello everyone and welcome. This is Kevin with Online Trader Central. We wanted to first give you a little bit of information about Lee. Lee is an award-winning lead developer with PowerZone Trading. He's an independent trader specializing in the E-mini markets and also an expert on strategy automation. He's also an award-winning author, and his articles on trading and technical analysis have been featured in the technical analysis of stocks and commodities, futures, active trader, futures and option trader, and trader journal. His article, Tuning Intraday Strategies, won the 2007 Technical Analysis of Stocks and Commodities Reader's Choice Award, and for the favorite article category. So with that, we would like to introduce you to Lee Leibfarth from PowerZone Trading and ask you to please put your hands together.
Thank you, Kevin. I hope everyone can hear me okay. And I'd like to just thank everyone for participating in today's presentation. And also I'd like to thank our event sponsor, NinjaTrader. As Kevin mentioned, my name is Lee Leibfarth, and I'm from PowerZone Trading and baranalyzer.com. And I definitely appreciate your time today. And I'm excited to talk about the 5 steps to automating your trading. Today's presentation, we're going to focus on automating short-term trading ideas. And many years ago, I wrote an article that was published in the March 2006 issue of Technical Analysis in Stocks and Commodities. It was titled The Automated Day Trader. And at the time, back in 2006, trade automation capabilities were really new to retail traders, and there were only a handful of platforms that provided automated trading ability. And to be quite honest, none worked particularly well for testing or automating short-term day trading strategies. So now, 8 years later, NinjaTrader has really created one of the most powerful platforms for short-term trade automation, and it's really what we're going to base a lot of our discussion on today. They also have what's called a strategy analyzer that allows us to dig into our strategies and really refine those. So as we work through today's presentation, we're going to be talking about a product called the VStops Pro Trader, and we're going to be kind of using that with the NinjaTrader platform. I do need to point out a disclaimer, and that this presentation is for educational purposes only. So during this presentation, I'm going to begin with an introduction about automated trading concepts and how the VStops Pro Trader strategy template for NinjaTrader can help jumpstart your automated trading if that's something that's interesting to you. And we're going to cover the 5 steps to automating your trading. And those are, number 1 is planning. And that just means outlining your entries, exits, and money management. Step 2 is testing, and this is just the ability to backtest or evaluate your strategies over historical time periods. Optimize or optimization, this just allows us to improve the strategy's performance. Walk forward. Now this might be a new term to many of you. Walk forward, just all this means is that we're going to confirm the results of the previous testing and optimization. So when we walk forward, really what we're going to do is just make sure that we haven't curve fit our strategy to fit a particular market, and that it has the highest probability of working in new market conditions. And finally, trading. And this is where it gets fun. This is where we're going to automate the strategy and see how we've done. So also, there might be quite a few misconceptions about an automated trading strategy that I hope to clear up during the presentation. And the first concept that we'll cover is that automated trading requires a strategy, and that a strategy is essentially a set of rules that define all trade entries, exits, and position sizing. And for discretionary traders, this is known as a trading plan. But for automated or system traders, this is called a strategy. So now, let's discuss what an automated trading really is. And many traders think of black box trading when you hear automation, and that there's a robot making trades through your trading account without really understanding the reasons why. And today's strategy automation really doesn't have to be a black box system. In fact, you can develop or customize strategies for automation that still maintain full control and understanding of why the strategy is making trades. So instead of the evil robot account terminator, you can really use a strategy template like the VStops Pro Trader strategy to jumpstart your automated trading without losing control. And again, I want to highlight that what we're going to be talking about today is not black box trading. It's not purchasing a system and not making any decisions, this strategy template that we're talking about today and the process we're talking about today involves you becoming involved in the testing process, in the evaluation process, and in the whole automation process. So you still maintain quite a bit of control over your trading. So the VStops Pro Trader strategy template, we'll talk about what that is a little bit. It's really a collection of tools that are designed to help traders build profitable day or swing trading strategies and to harness the power of automated trading. We've noticed over the years, and as a developer, we've certainly developed a lot of custom strategies for our clients, and these can cost upwards of $4,000 or $5,000, and that we really saw a need to have some type of trading tool, intraday trading tool, day trading tool, that would allow traders to automate a strategy, and this is what the Pro Trader really is. And what the Pro Trader includes a few different parts, and it starts with at the core is the VStops 2.0 indicator and bar color utility. And what these are indicators, and these have been on the market since about 2006. And what they do is that they're a very easy way to visualize price moves in the market, especially focusing on new trends. So this is really the core of what the Pro Trader is all about, and what we add to this is a full functioning strategy. And the strategy template allows you to define exactly what type of trades you want to take, whether it's scalp, day, or swing, what time of day you want to trade, as well as a dollar amount for risk or profit goals. And you can make use of backtesting and optimization techniques to quickly determine if your ideas will have been profitable in the past, and to maximize the potential of this strategy in the future. So now let's take a look at how the VStops Pro Trader works on a price chart. And for most of us, price charts, whether they're candlestick, open, high, low, close, Renko, or another type of chart, are how we visualize the markets. And here on this chart, we have a chart of the E-mini S&P from Monday's trading session. And for the price chart alone, it can be difficult to see where to place trades, especially in volatile intraday markets such as this one. So next, we'll overlay the VStops indicator and bar color utility. And here, it's much easier to see trade possibilities in the start of new trends. The VStops indicator, it's designed to be fast. It's designed really to function fast intraday markets, and it uses a adaptive volatility calculation. And this indicator, it's really easy to use. When it's green, it indicates that there are strong market conditions for buying. When it's red, it shows a market condition that's better suited for selling or short selling. And we found that this indicator can provide earlier entries than other ATR or trend tools, especially in fast intraday markets. So the two parts of this indicator, the first is that the color, which I've already mentioned, the color code shows the direction or the possible direction of the market trend. And then you'll see these dots, the green dots below or the red dots above. And what those dots are pointing out is possible stop locations. In other words, if you were in a long trade here, you could use these dots to kind of help manage where you would exit that trade, as well as other tools. So the indicator is really just a tool to point out a market condition. And then the third piece, and that's actually the strategy. And now we can see the strategy, it generates trade entry and exit locations, all of which can be easily automated to place actual trades. So I'd like to explain some advantages of automated trading and using a strategy. And this particular trade is what we call a rock star trade. We have this strong trending market that is very well suited to the VStops indicator. So when I talk about rock star trades, it's really looking for something that's a very strong trend where the VStops can latch onto it. But some of the advantages that you can have in using an automated strategy or a strategy, the first is the ability to backtest. And this is really one of the most powerful benefits of using a strategy. And this process refers to applying a strategy to historical data to see how the system would have performed during that specific time period. And this ability to test on historical data is an incredibly powerful way to validate a trading concept or idea. And something we say is, like, as long as the idea can be quantified, it can be back tested. So next is optimized performance, or what we call optimization. And this is just the process of finding the ideal value for a specified strategy setting. And this involves entering a range of, for the strategy settings and letting the computer do the work or do the math to figure out which value would have performed best. We also have what are called multi-variable optimizations, which is really just a fancy way of saying we can look at more than one variable at a time when we're using this optimization. The next advantage is achieving consistency, and I find that one of the biggest challenges in trading is can be sticking to your plan. And even if a trading plan has the potential to be profitable, traders who ignore the rules, they alter the expectancy that the system would have had. And what a strategy does is it allows you to achieve consistency by trading exact rules. In addition, pilot error is minimized. So in order to place, let's say, 100 shares, can't be incorrectly entered to say 1,000 shares. So consistency is definitely a big advantage to automating your trading. Minimizing emotions. Strategies can minimize emotions throughout the trading process. And just by keeping emotions in check, you have an easier time sticking to the plan. And since strategies execute trade orders automatically once the rules have been met, you won't be able to hesitate or question the trade. And in addition to helping traders who are afraid to pull the trigger, strategies can also curb those who are apt to overtrade, who are buying and selling at every perceived opportunity, because it's really only going to stick to the rules. And then finally, improve order entry speed. And since computers respond immediately to changing market conditions, strategies are able to generate orders as soon as trade criteria are met. And getting into or out of a trade just a few seconds earlier can make a big difference in the trade's outcome. And as soon as a position is entered, all other orders can be automatically generated, including protective stop losses, profit targets. And since markets can move quickly, and it can be demoralizing when you have a trade reach or a profit target or blow past a stop loss before your orders can be entered. And so that's where an automated strategy can really prevent that from happening. So these are really 5 elements that we feel are important and can be an advantage to automated trading. And so let's just take a minute and talk about how we would automate a trading idea, or how this would look like if we were automating it in real time. And of course, this is not real time. We're actually going to just do a few slides here, but we're going to go ahead and imagine that we have the Pro Trader strategy applied to a market. And the first thing that we're looking for here, and this is a 5-minute market of the E-mini S&P, we see weak pre-market, and then what we would do is we would look for a transition into a strong buying condition. And when that happens, as soon as that happens, the strategy would enter a long position, in this case at about 10 a.m. with multiple contracts. So as the market moves in our favor, we would all of a sudden use multiple profit targets to exit the position. So we'd be selling off at predetermined profit goals. And then I would take our remaining position, and as VStops kind of move down into a selling position, we would reverse that into a short. And then as the market fell, we would go ahead and take another profit target, and then close our remaining position at the end of the day when the session closed. So this is just a day trading methodology that when automated, we'd be placing these 5 orders, and as the market ticked along, it would automatically be placing these orders and making the calculations for us. So this is, again, just an illustration of how we can use an automated strategy in our trading. So how do we automate a trading idea? Well, there's really 5 different steps, and that's what we're going to be talking about during the remainder of this presentation is how we would take and automate a trading concept. And the first, and I mentioned this, is planning. Is coming up with a plan to define the conditions or rules of how the strategy will trade. Next, we're going to test it using historical data, and this will verify if the plan has potential. We're also going to optimize it to find the best values, the best possible values that the strategy could have to achieve higher results. Then we're going to use this walk-forward analysis to validate our optimizations in our initial testing. Now keep in mind, you can go through the first 4 steps of this process, realize that your strategy doesn't perform the way you expect it to, or it doesn't give you quite the results that you're hoping for, and this brings you back to the planning stage. So this cycle can go on continually, and one of the cool things about automated trading and using a strategy is that this doesn't cost you anything. Unlike a discretionary plan where you're actually trading the markets, going through this four-step process, you can do this virtually without spending any money in risking your trading account. And it's only when you've gone through this cycle and you've decided that your trading plan or your strategy meets all the essential criteria that you go to the fifth step, which is actually trading that plan. And as we'll discuss a little bit later, that's probably the easiest step in this whole process. So let's go ahead and we'll dig into some of these this process and talk about how we can use the Pro Trader in a trading application and how we can set it up. Now, I did notice there's some questions appearing on the chat box, and I want to just I'll try to address all those questions at the end of the session. So please don't feel like I'm ignoring you. We just have a bunch of slides to get through, and I want to make sure I cover the material. But I also look forward to taking some questions at the end. So we'll begin by talking about strategy planning, and one of the things that we need to start off with is we have to define the conditions of how the strategy is going to trade, and we also have to have a way of converting this into a way that the computer can understand it. So when we start developing our trading strategy, it involves developing trading rules and converting these into something that the computer can understand. And this is also known as converting it into a trading plan or computer code. And this is another misconception about automating your trading. You don't have to be a programmer to create a profitable strategy using tools such as the VStops Pro Trader. And this is also an important step. If you have a trading idea that you want to be able to quickly prototype, there could be a significant cost involved in going through this programming process. So with the VStops Pro Trader, we're really hoping to jumpstart that process a little bit and really allow you to focus on the 5 aspects that we feel are that are important to beginning automated trading. So once again, in the first step in strategy planning is converting this into something that the computer can understand and subsequently test. Now, there are a number of different areas that we can use within the VStops Pro Trader strategy template that will allow us to adjust how the strategy performs. And as I stated earlier when we were looking at the account terminator slide, it does not have to be, this is not a black box system. The VStops Pro Trader is really intended for self-directed traders who are willing to put in some time and some effort to go through this 5-step process. And in trade planning, even though we have a tool, the VStops Indicator, that will give us some volatility calculations and can help us plan our entries, there are certainly some ways that we can use this in different ways, and I don't want to say manipulate it, but we can change these settings, and it's really as easy as changing inputs. So unlike having to go in and reprogram the entire strategy, we've created a series of inputs or input settings that would allow you to quickly adjust or fine-tune the strategy to meet some specific needs. And we have many traders that are using this in very unique ways to meet their market goals on quite a few different markets. So let's talk about the 5 really the 5 things that we can do here, and what we're going to try to do is answer some important questions in this planning process: the what, why, how, and when. So when we talk about trade planning, that's all we're doing. We're answering questions: what, when, how, and when. And the first element that we can control are the VStops settings. And these settings allow the strategy to define the VStops calculation. And as I mentioned, VStops began as an indicator. And there's 2 primary settings that you can adjust to tune the indicator to different markets, and that's called the period and the standard DV. And with these 2 settings, you can really change the calculations with the indicator to fit a particular market or chart interval. And so just like with the indicator, the strategy allows you to change these settings. So these same VStop settings that are available in the indicator are also available on the strategy as well. And you can use both of them. I really like to use the indicator because it helps me visualize where the strategy is going to go. And so these values will have the largest immediate effect on the performance of the strategy since they define the location of all the trade entries and possible exits. The next thing that we can change or alter within the template is the money management, and this defines the trade exit strategy that we're going to use and how the positions are handled during the trade. And these include things like position size, profit targets, stop loss, break-even stops, and bracket exits. And we'll discuss each of those in a little bit more detail later. Performance switches, these are essentially true-false switches that define how the strategy will perform during specific conditions. And these include things like allowing overnight trades, taking trades at the open, reversing the logic of the entire strategy. So these are performance switches that allow you to define how you'd want to use the VStops Pro Trader template. So if you were a swing trader, for instance, you would want to adjust some of these performance switches so that you held positions, throughout multiple sessions. On the contrary, if you're a day trader, you'd want to close out your positions at the end of the day. So we have switches built in that will immediately change or morph the strategy to fit a particular trading style. The next thing that we offer are time filters. And again, these are all things that you can alter within the strategy. You can change how the strategy behaves based on changing these inputs, and it's a very simple process. The time filters define the intraday time when trading can take place. So in other words, if you're looking at a day trading strategy, we want to define, at what point in time do we want to start taking trades, what point in time we want to stop taking trades, and at what point of the day we want to close out all of our open positions. So again, this allows us to fine-tune this to different market conditions or possibly to different schedules. We've got definitely, some traders that, trade in the morning and don't trade in the afternoon, and the time filters will allow the strategy to basically engage, any time in the morning and then turn off and not place trades after a particular time period. And then the final piece of our trade planning here, our initial trade planning, the what, why, how, and when, is really choosing what we want to trade, the chart, symbol, and interval. And deciding what to trade in which chart interval best meets your needs. And this can, certainly your chart intervals can be dependent on the particular trading styles that you have. But that's also, something that we can fine-tune as we get a little bit farther down the road, is what is the optimal interval, or what is the best interval for your particular strategy settings. And then chart symbol, that is not something that you necessarily control from within the strategy, but you have to decide what chart you're applying your strategy to. So this would, be just a selection of what symbol or symbols you plan on trading. So next, I want to take a look at some trade examples to illustrate some of the possibilities and terminology used in trade planning. And again, we'll be using the VStops Pro Trader as an example. In here you can see how the VStops indicator can really illustrate changing market conditions. It's very visual. It's a very easy way, to see if we're in a green, a long or a red short market position, and we can even fine-tune the, the colors if you need to. These are all things that can be altered within the strategy as well as the indicator settings. So the first thing, or maybe the most basic plan of attack that you can use is what's called a stop and reverse methodology. And the Pro Trader definitely allows you to do this. And in a stop and reverse type of system, what we do is we essentially follow the paint bar, follow the the bar color, so that we'll be looking to go long when it's green. We'll be looking to go short when it's red. And with the stop and reverse type of methodology, we're always in the market. In other words, we're either going to be long or we're going to be short. We're never going to be flat. And when we're using a stop and reverse methodology, the advantage is that because we're in the market all the time, we're guaranteed to catch trends. In other words, if the market were to skyrocket and just all of a sudden go into, a huge uptrend, we would know that we were going to be there because we're always in the market. Now, the downside of trading the stop and reverse methodology is that because you're in the market all the time, if it's not trending, if you have periods of consolidation, you can start to take some big losses. You can start to get bounced around and take some, potentially damage your trading account. So a lot of times, especially for short-term traders, instead of going to a stop and reverse methodology, we'll use some other tactics that will allow us to really control our risk a little bit better than always being in the market. And one of those tactics include what's known as a profit target. And what a profit target is doing for us is it's setting a predetermined location where we're going to exit the trade. So in this scenario, you can see at the bottom of the chart here where the arrow is circled, we have a blue transition bar. And that's our entry point into the trade. That's when we're transitioning from a red to a green condition. So that's where we're going to place our buy order. Now, as soon as we're in the market, we are going to go ahead and place what's known as this profit target, and it's essentially a limit order that's going to go above our entry price. And the advantage of a profit target, and again, the profit targets are not something that you adjust while you're in the trade. It's something that you set well beforehand. And you can use, you can measure the markets and look for a good location for where to place these profit targets. But ideally, when, once the market hits that predetermined location, it's going to automatically sell at that point. So it's going to use that limit order to close you out or sell. Now, there's some other ways that we can, we can kind of add to that, and that's first one is a single profit target. We can also use a double profit target. So this would be setting a second profit target someplace above the first one so that we're scaling out of a position. So as the market continues to move in our favor, we're just saying at this point we're going to, we're going to place two separate exit points to close out our position. Now, with these profit targets, let's keep in mind that there's other ways that we can exit the market, and the third way is using the VStops exit itself. So this would be if the trade were to fall back into the VStops dots. Those are those green dots that appear underneath the price bars. At that point, that would give us a good indication of when to exit. Now, I will mention with a setup like this, and with the Pro Trader template, you can choose whether you have one profit target, two profit targets, or two profit targets and the VStops exit, or you can choose not to use them at all. So these are just some options that you have. But what I want to point out is this is a very popular way to manage your trades by scaling out with multiple profit targets, but keeping one position on in case that market was to really going to continue to skyrocket or trend. And when I place this type of an order, it's always my my desire that that exit that's going to be at the VStops level is going to be well above my two profit targets. So we talked about using a stop and reverse methodology to catch the trends. Well, this is another way that you can catch the trends, and maybe a little bit of a safer way if you're trading on a very short-term basis, because you have your profit targets will start to take you out of the market at measured locations. But then you still have this final position, maybe the final third of that position is in there and will stay in there, and hopefully it will exceed your profit targets. In this particular case, it did not. As you can see, we bounced back, and it was a good move, but we still didn't exceed where our profit targets were. But this type of methodology can be employed within the VStops Pro Trader. Let's talk about some other things, and some of you may already be familiar with these. I'll just cover them briefly. One is called a stop loss, and a stop loss is just it's an order that's placed below your entry price in case the market goes against you. And you might be asking, well, Lee, VStops already has those stop dots. Why do you need a stop loss? Well, with the Pro Trader, the stop loss values as well as the profit target values are based on a dollar amount. So even though the Pro Trader, the VStops will kind of point out a potential stop location, it might not be appropriate to your style of trading or your account. So you can use a stop loss and define a particular dollar amount to say, like, let's say I don't want to risk more than $500 on any given trade. You can set that, and if the market reaches that, it will close you out for a loss. And while losses are not fun, it's a way to help protect your trading account and allow you to stay in the game for another day. The next thing I'll talk about is a break-even stop. And what a break-even stop, it's similar to a stop loss in that it's going to start at a dollar location. But with a break-even stop, once you've reached a certain profit objective, in other words, once the market has moved with you a certain amount, it will actually take that stop and move it back up to your entry price. And why this is important is that if you had a trade that initially went with you that's looking great, and then all of a sudden it turns and goes against you, you might not want to take that full $500 stop loss. You might want to protect some profits, and this is where a break-even can help with that. And the break-even can also be used in conjunction with other tools such as the profit targets. Okay, and the last piece I'll talk about here in terms of specific types of trades that you can use with the Pro Trader template is what's known as a bracket exit. And a bracket exit is basically combining two of the orders that we've already used, a profit target and a stop loss. So in this scenario, we would place a profit target above our entry price at a predetermined location. We would decide a dollar amount for our stop loss, and those would both go into the market simultaneously. Now with a bracket exit, once we have price reach one of these, in this case we see price reach the profit target before the stop loss, it is going to close out the position, but it's also going to we also have an existing order, it's going to cancel that stop order. Okay, so if we were just to place two orders in the market, one a limit order for our profit target and one a stop order for our stop loss, if one of those got filled, we would still have an active order in the market. So what a bracket exit does for us, it just automatically cancels that outstanding exit. So that's just the kind of the terminology that I'll be using, or we can use within the VStops Pro Trader template. And again, these are all things that you can adjust. You can decide that you want to use profit targets or a break-even stop, or just experiment to see how they would work in a particular strategy. So we're going to shift gears a little bit and talk about testing. So this is the second step in the automation process. And before we really start testing, we have to determine how we're going to test. And this is a very important step that's often overlooked. Traders, often make the mistake of testing their strategies on every bit of available historical data. And here I'm going to throw some more terminology at you. And when we define our historical data, in other words, if we have, let's say, 6 months of data that's available to us, if we're looking back over a time period of 6 months, we don't necessarily want to test our strategy on every piece of data, all that entire 6 months. And the reason for that is that the initial historical data, which we're testing and optimizing on, it's referred to the in-sample data. So in-sample data is the data that we do our initial testing on. Now, we also want to keep a set of data that's reserved, and this is known as out-of-sample data. And this clean set of data is an important part of the valuation process as we get to the walk-forward step. And this is because it provides a way to test the idea on data that has not been a component of any optimization. And as a result, the idea will not have been influenced in any way by out-of-sample data, and it will be able to determine how well the system may perform on new data, in other words, in real-life trading. So again, if we have 6 months of data, I'm probably only going to take 4 months of that data to do my initial testing on. So I'm going to start with 4 months of data, and I'm going to leave that remaining 2 months of data out there so that I have a comparison to see if all my testing is performing the way I want it to. And we're going to dig a little bit now into the NinjaTrader Strategy Analyzer. And as I mentioned earlier, this is a very powerful tool that NinjaTrader offers, and we can use it to evaluate strategies. In this case, we're going to use it to look at the VStops Pro Trader strategy, and we're going to define what we're looking for. And there are a couple things that we can look at here, or a couple things that we can use to evaluate. And the center part of this strategy analyzer is what's known as the performance report. And with the performance report, there's a lot of data at our fingertips and a lot of metrics at our fingertips. And for short-term trading, for day trading and shorter-term strategies, I tend to just focus on a few of these elements to give me an idea of how well my strategy is performing or the fitness of my strategy. So the first thing I want to mention is I think that when we look at a strategy report, the first thing most of us fixate on is what's called the total net profit. And this is just the, essentially the P&L for the strategy. This is how well the strategy performed over the testing period. So in this case, we're looking at 4 months of data, and this just gives us a sense of how well the strategy performed. Now, one thing that I want to just mention is that this can be one of the most deceptive metrics on this entire performance report. And the reason for that is that it's relative, right? If we have a strategy that is making, in this case, $8,500 over a few-month period, all we have to do is add more contracts and that number gets bigger. So it's very easy for us to make that into a very big number, and without really looking at the efficiency of the strategy. So what I recommend is not focusing on this total net profit. I mean, of course, we're going to glance at it, but it's really not the most important thing on this performance report, and it's something that a lot of traders get caught up in. And again, it's not the most important thing on this performance report. It's not necessarily going to give us the best guidance in helping us create a robust strategy. So instead of looking at total net profit, I'm going to look at 4 other metrics on this report that can give us maybe a clearer picture of how the strategy is performing. And the primary fitness factor that I use in my strategy testing is what's known as the profit factor. And what the profit factor is just the gross profit divided by the gross loss for a system, which is including commissions. And the way this works is that any value greater than 1 shows a profitable system. If the profit factor is a decimal, if it's 0.5, it means that it's a losing system. So at 1, it means that the strategy is at break even. In other words, over the testing period, it hasn't made any money. So what we're looking for are numbers that are greater than 1. And the performance report I pulled up here is actually not, it's not stellar by any means, but it does illustrate that we have a potentially profitable trading strategy with the profit factor at 1.39, or at least it's profitable on this historical data. The next piece I look at when I'm testing the strategy, the next metric that I feel is important is what's called the maximum drawdown. And what this measures is just the greatest difference or loss from an equity peak. And this is kind of what I think of as the worst case scenario for this trading period. And why this is important is because the max drawdown can show us how realistic a strategy really is. So if we take the Pro Trader and our first run, we see a 10% drawdown, it might show us great metrics, but if that drawdown is too high, we may not be able to afford to trade it. In other words, it might put us right up against margin limits, and it may not be realistic to trade. So by looking at this max drawdown, this gives us a sense of really how realistic this strategy is given the size of our trading account. The next metric I look for is percentage profitable. And this is really just, it's the number of winning trades divided by the total number of trades for the system. And it essentially gives us, it represents the winning odds of the system, or what the odds are for the system. So at 50%, that means you're thinking, wow, that only wins half the time. Well, that's okay. It can win half the time as long as its winning trades are significantly greater than its losing trades. And so for this number, it depends on the type of strategy that you're using. But it essentially, for trending markets, you can see strategies that are at 40% profitable that are still very successful strategies. So again, it depends a little bit on the methodology, but this is, an important metric for determining, how often your strategy is winning. And then the final metric I look at, it's not really the final metric, but the final one that I really focus on is what's known as the average trade or the average trade net profit. And this is really the expectancy of your system. This is, this is the total net profit divided by the total number of trades, and it represents the average amount of money that was won or lost per trade. So again, it's the expectancy of your trades over time. So this one, obviously we want to see this one as high as possible. We want to see big numbers here because this, along with our profit factor, gives us a good gauge to how successful, our strategy could potentially be on this historical data set. So now that we know how we're going to test or what we're going to use to evaluate the strategy, what metrics we're going to use, the next step is optimization. This optimization step, and I'm gonna kind of define this more as what I would call smart optimizations. And this is just a process of adjusting the strategy in an attempt to make it more efficient. And what's cool about optimizing is that it answers questions about the strategy. And I mentioned that the VStops indicator has been available for quite a while. And one of the biggest questions, I think traders have about using, an indicator is that what are the best settings for this indicator? What is the best settings for this particular market? Well, when we optimize, we can answer those questions. So any of the parameters, the input settings that are available in the Pro Trader, we can optimize those. That includes things like, what are the best settings for VStops? What is the best time frame? And maybe even what is the best market to apply it to? So the things that we can optimize are all of the settings for the Pro Trader strategy. That's all the input settings. And then we can also optimize what markets and what time intervals we wish to use. So again, we're going to answer some important questions here. And in order to optimize, we've got to choose what parameters we're optimizing first, and then we're going to set an upper and a lower limit for where we're going to optimize them. And then the computer's going to do the work. And so the first thing I always look at with the VStops Pro Trader are the settings that are common to both the indicator and the strategy. That's the period and the standard DV. And in this scenario, we're going to take a look at the period, and what we're going to do is start at 10 and go all the way up to 40 in increments of 1. So what that's going to do is go from 10, 11, 12, 13, 14, 15 until it gets up to 40. And it's going to do every iteration, and it's going to measure what the profit factor is for every one of those along the way, and it's going to choose the highest value. Now, at the same time, I'm also going to look at the standard deviation, which is the second input setting for the indicator and for the strategy. And for this one, we're going to start at 1.5 and go up to 5 in increments of 0.5. So it's going to go 1.5, 2, 2.5, 3, all the way up to 5. So in this sense, we're going to try to find the best combinations of period and standard deviation, which is going to yield the best profit factor. And again, this is an iterative process, and it's something that's very cool to just let the computer run. And in some cases, when you run multiple variable optimizations, the computer can run for quite a period of time until it, it can run for hours until it kicks out the right value. So it can do a lot of work, and I don't want to say a short amount of time. It can take some time, but it can do a tremendous amount of work to give you answers as to what are the best settings. And the other thing I have optimized in this screen is the minute value of the chart interval. And so the other question I'm asking is, well, what chart interval is best suited for this strategy? Anywhere between a 5 to a 15-minute chart. We're going to test on every minute. And so once we did this, what we came up with was that the best settings, VStops settings, were a period of 36 and a standard deviation of 2.5. And the best chart interval was an 11-minute chart, or at least the one that provided the best profit factor for this market period. So again, as we're optimizing, we're trying to answer questions about the strategy that can help make it potentially more profitable, or to tune it to a specific market. Now, after I did that optimization, I also wanted to optimize what our best profit target and stop loss amounts would be. So I did the same thing there. We started at 25 and went up to 1,000 in increments of $25. And what we determined is that for this testing interval, the best profit target was $825 and the best stop loss was $950. And again, the computer is going to do the work here, and it's a very cool aspect to using strategies, is that it will optimize us and tell us what those best values are for that particular time period. Now, here we have to kind of we're going to talk about walk-forward testing, but the last concept that I want to throw at you when it comes to optimizing is what's known as over-optimizing. And what over-optimizing is, it just creates a system that looks good basically on paper only. And with enough optimizing, virtually any trading system can show close to a 90% profitability. And it's not the performance reports that matter, it's how the system is going to trade in real life that we care about. And so that's why the walk-forward testing phase or step is very important in our process. This is the fourth step along the way here, and when we're walk-forward testing, what we're going to do is we're going to take that first test that we've done on the in-sample period, and we're going to compare that to an out-of-sample period and see how it does. So on the chart that I have right here, what we're looking at is an equity curve. So what each of these dots represent is a new equity peak. And from the point where we had, and this is the dollar amount along the y-axis here, the x-axis represents the amount of trades. So within our first 70 trades, you can see where this yellow arrow is. That represents our in-sample period. This is the period in which we did our initial testing. And what it showed was that we had some pretty good results. You know, we immediately shot up and saw some profitable trading from the system. Now, once we ended that, we now take that same system, the same settings, and we apply that to the out-of-sample data. That's the 2 months that we have of data that we didn't use in the testing. And when we did that, we saw we almost lost all the ground. So between trade 70, which is the yellow arrow, and trade 100, which is the red arrow, this was our out-of-sample trading period, and we really faltered. We basically lost all the ground that we made during that in-sample trading period. And this is an indication that we may have over-optimized the system, that we might need to go back and look for maybe some more reasonable values in our profit factors and you know, our other metrics that would allow this to be better suited to real market conditions. The other thing here is that the trades after 100, these represents trades that were taken in actual live trading. And as you can see, you know, we didn't see anything any better. In other words, we really didn't gain any ground here. So what we could determine from this is that since our out-of-sample testing did not meet our you know, the same type of correlation that we would expect in our initial tests, that this is not a system that we would want to automate or put in the markets. So walk-forward testing is basically a way for us to take data that the system hasn't seen yet and apply it and to come up with some you know, some new results based on that. Now the next chart I'm going to show you, the next equity curve, is a little bit happier. In this scenario, we still had our in-sample period of 70 trades, and we saw that we had some nice equity peaks within that trading period, which is what we want to see. And then between the yellow and the red lines, between trades 70 and 100, this is our out-of-sample trading period. So in other words, this is data that we did not use in our initial optimizations. And what we saw is that all of a sudden we stayed on that same kind of slope, that equity slope that we had in our initial testing. And that's exactly what we want to see, because at that point it gives us a lot more confidence to go ahead and automate the strategy and put it in the market. And what we see in the automation is that we also, you know, we had some nice gains, and then we plateaued here a little bit, but we did see these nice gains. So, you know, this is kind of exactly what we're looking for in the process of going through testing, optimization, and then walk forward. So this is a kind of you know, an example of a good walk forward result. Now, the final step in all this is really the easiest. This is the trading part of it. And once you've done the work, once you've gone through the planning, the testing, the optimization, and the walk forward, and you're happy with the results, trading is simply turning on the enable checkbox for the strategy. And it's that simple. Really, you just have to apply the strategy to your live trading account and turn it on, and it will trade for you. It's that simple. So there's not a lot to really talk about in terms of trading an automated strategy. It's really everything that you've done leading up to that that will you know, help you gain success and at least create the best chances that your strategy is going to perform in real life the same way as it did in you know, in your testing phases. And or prospective clients who ask for a particular chart shot of a market, and so I'll just show you some recent ones that we took here. And the first one is this is a 10-minute, excuse me, I believe this is a 300-tick chart of the crude, the January crude contract from yesterday. And here you can see there were several different VStops trades, and we bounced back and forth quite a bit. But you know, again, this is, you know, some potential here. Not all trades are going to look like this. Not all systems are going to look like this. But this was particularly good market conditions for the VStops Pro Trader. The next one I'll show here is these are some day trades that were taken off of the E-mini, a 10-minute E-mini S&P chart. This is the S&P December contract, and what we're looking at here are basically day trades. And you know, the last, well, today was actually a good down day for VStops, but when we looked at Wednesday and Tuesday's trading activity, we saw those big uptrends, and again, those are well suited to the VStops methodology. And we can see trades were taken here on the transition, and they were exited at an end of the day exit, or when it determined that the session ended. So those are a couple of examples there. And then I actually have quite a few traders who work with Renko charts. And Renko charts are becoming quite popular these days. And you know, VStops is compatible, and the Pro Trader is compatible with Renko charts as well. So this is a Renko chart of the E-mini S&P. And when we put VStops on there, you can see it really it highlights the trending conditions very well. And you might be asking, well, I don't see any trades here, Lee. Well, there's actually a trade. This is a swing system. It's a Pro Trader swing system, and it was, you can see a trade went in right at, there's kind of a blue arrow right here, and it actually stayed in the market. So we actually we're still in this trade, so that's why you don't see an exit or any of the trade lines on this. So basically, the VStops Pro Trader works very well in trending markets and trading it. As far as once you go through the process, it is a very simple process. So let's see here. I just want to recap really the things that we've talked about in the presentation, and I acknowledge that I've thrown a lot of information out there. But to break it down, again, we're going to always start by planning, and this is where we plan our strategy and outline our entries and exits and money management. And we can do this, with Pro Trader. We have a lot of different input settings that we can use to plan out how we want to trade. Number two, we test it. This is where we back test our strategy and create and evaluate our performance reports. Number three is that we're going to optimize it, and this is what allows us to answer questions and improve the strategy's performance using smart optimizations. Walk forward, this is where we're going to use our out of sample and forward data to confirm our results. And again, we can cycle through this. If this doesn't work out for us, we can go back to the planning phase. But then our final phase is trading it. And then when we're happy with the results, we automate the strategy and we trade it. That's pretty much how how it goes. Those are the steps. Now that we're kind of through the meat of the presentation here, I do want to kind of point out a special that we're offering, and this is available to Online Trader Central participants of this webinar. Typically, when we work with trading strategies, there couldn't be, if you're developing a custom trading strategy, and I do this quite frequently, it can cost thousands of dollars to have a fully functional day trading strategy. And we are offering a special right now where you get a 25% discount on a lifetime subscription to the VStops Pro Trader. So you can own the VStops Pro Trader for $750. That is a lifetime subscription. In other words, that's good forever. It's good for multiple. You can use this on up to 2 computers, and it's 25% off our normal price. This is going to be available through December 11th. Okay, so keep in mind you get the VStops Indicator, the paint bar study, and the strategy template, so you can customize your own strategy to match your trading style, risk tolerance, and goals. And you get all the benefits of strategy automation. You can backtest, optimize, and achieve great precision and consistency in your trading. And of course, you can still use the VStops Indicator and paint bar study to trade on a discretionary basis. And by that, I mean you can use the Pro Trader to test and confirm your trading ideas and still trade these on a discretionary basis. So, these tools can be used together or separately or at your choice. So that's, I hope, I've been able to kind of highlight some aspects of automated trading and really what, if you haven't traded on an automated basis before, it's a very cool process. It's a neat way to view the markets. And the Pro Trader strategy template, our product that we are, we're offering here, it's certainly, not the, it's not a black box system. It's not a plug and play. You're not going to be able to plug it in and just, start making money right out of the box. You've got to do some work. You've got to go through that process, but it is a fully functional day trading or swing trading system that is based on, kind of a time-proven indicator and methodology. So along with that, I think we just have a few minutes left, and I would like to open it up to some questions that we might have and talk to you a little bit. Now, one question, I'll kind of scroll through here, but one question I see is a trader asks, is it possible to manually bypass some of the signals when the strategy is running? That is actually a good question, and the quick answer is yes, it is. You can always turn off the strategy, but to cherry pick the signals, that's not something that is easy to do or really is recommended. At one point in my trading, I was trading an automated strategy, and I did that, and I wound up mismatching my my strategy to my live position, and I wound up having to call the trade desk and say to my broker and tell them what happened, and they scolded me. They basically said, well, are you a systems trader or are you not a systems trader? And so really, it's in your best interest, I think, to stick with the rules of the strategy and to maintain the expectancy of the strategy. That being said, if something goes terribly wrong, you can always close the strategy down and cease trading and close out all of your positions. But it's not really intended for a live interaction. Now, with that being said, you can use the VStops indicator by itself in your own discretionary trading. You can certainly use that and as a trading tool, and just use the strategy template to test what the best market conditions are or settings are for that. So with using the indicator and the paint bar, that could certainly be used in a discretionary basis. Okay, do you have demos on? I do not have demos available, and I think it's a great question. And the reason that we don't provide a demo or a trial of the software is just, as with any trading system, planning and testing takes time, and we don't want traders to feel rushed through the process with a short trial period. So we do provide several subscription options that include monthly or annual, as well as the lifetime duration. And if you're unsure if this is the right product for you, we recommend that you start with a monthly subscription. This way you can try out VStops Pro Trader for a month and then cancel your subscription if you don't wish to continue. But I will say, this is a pretty, this deal on a lifetime subscription is only going to be valid through December 11th. We're not going to be offering it again this year, and probably not for a long time. So if it is something that you're interested in, it may be worth, checking this out. Okay, so I've got some questions. Can it accept other indicators into the system and possibly combine with the VStops indicator? The short answer to that one is no. It's really designed to work with the VStops logic, and you can redefine that logic a bit. You can certainly change those settings, but it's not the type of tool where you can insert different indicators. And part of that is that we don't want to we want to keep the entries very basic so you can understand them, and not that. I trade simple. I mean, I like to keep it as simple as possible. That's kind of been a mantra of my trading since I got started in this industry. And so, that's why I like VStops, in that it allows you to kind of use, the simplicity of the indicator and apply that into the strategy. Does the strategy include daily max loss target settings? The strategy includes settings for your profit targets and your stop losses. It does not, you cannot, it does not have an overall adjustment for the maximum daily, equity max or loss, but you can set that on a per trade basis. Do you have videos of the system available? I do have some videos, and I believe we're recording this one as well, but we have some setup videos that are available on the NinjaTrader platform only. Okay, I think I've got another one here. Can we, sorry, I'm having a hard time reading this. What is the difference between your VStops and super trend indicator that is available on some other sites? So that's a great question. VStops was designed, really with the intent of trading on the fast, intraday markets, and we use and this is the answer to the question. We use an adaptive volatility filter that is, we feel, faster. It actually gets you into entries faster than ATR or other types of trending indicators. Now, just by their nature, trending indicators are somewhat lagging. And so what we've tried to do is take out as much of that lag as possible in the VStops indicator. And since we released it in 2006, we actually just released a new version of it. It's called version 2, and that is the one that we include in the VStops Pro Trader template. And it has some features that are unique to, certainly the futures market. You can actually round it to a tick value as opposed to, having a decimal. So it's very easy to use it in your trading. But the short answer to the question is that we feel like this is a little bit more reactive because of its adaptive filter than other trend trading tools. And it uses this adaptive volatility. It's similar to the same type of filter you would use in like noise reduction, and so that is kind of what we feel separates this from other products. All right. Well, with that, I think that's all the time I have. I again want to thank everyone for participating in today's presentation. If you have any questions, you can log on to our website at www.baranalyzer.com. And if you are interested in taking us up on the special offer, please use the discount code SAVE25. Okay, and when you check out, use SAVE25, and that will provide the discount. Keep in mind, Pro Trader is usually a $1,000 product, usually $999, and on this offer, we are offering it for $750. All right, once again, thank you, everyone, and I will turn it back over to Kevin. I appreciate your time.
I want to thank everyone for coming out tonight to Online Trader Central. We want to thank our host, Lee Leibfarth. You want to go to www.baranalyzer.com. I'll be posting it again. Use coupon code SAVE25 to get 25% off a lifetime license of VStops. Our kind thanks goes out to NinjaTrader. As always, if you want to make a great choice in the brokerage, you want to look at NinjaTrader. Once again, thank you all for your time and your participation. I'm going to be posting all the information for everyone one more time. You have a great night ahead and a good weekend coming forward. Bye-bye now.